are candlestick combinations for? One single candle is rarely an independent signal, but a certain combination of 2, 3, or more candles can more clearly reflect the market situation and give an accurate signal. 1. Bullish and bearish engulfing. The engulfing combination consists of 2 candles of different colors. The shorter body of the first candlestick is absorbed by the longer body of the second. There are 2 types of engulfing, bullish and bearish. Bullish engulfing forms at the end of a downtrend and signals a bullish reversal, a change from a downtrend to an uptrend. The first candlestick should be red, the second green. The opening price of the first must be lower than the closing price of the second, and the closing price of the second must be higher than the opening price of the first. Bearish engulfing occurs the other way around and signals a change in an uptrend to a downtrend. A prerequisite is that in both cases the first candlestick cannot be a doji. 2. Morning and evening stars. This combination consists of 3 candles and, like engulfing, is a reversal signal. The morning star is at the peak of the downtrend and begins with a red candlestick, after which a green one appears with a noticeable gap between the closing price of the first one and the opening price of the second one. Moreover, the body of the second candlestick should be short, and the shorter the body, the stronger the probability of a reversal. If the second candlestick is a doji, then the signal is the strongest. The combination then ends with a long green candlestick. An evening star signals a downward reversal and is at the peak of an uptrend. It starts with a green candle, the second is a short red with a gap, and the third is a long red. 3. Dark cloud cover and piercing line. A dark cloud cover is at the top of an uptrend or at the end of a sideways movement and signals the beginning of a downtrend. The combination consists of 2 candles. The first candlestick has a long green body, the second has a long red body. The second candlestick opens above the closing price of the first one and closes near the opening price of the first one. The lower the closing price of the second candlestick goes, the stronger the reversal signal is considered. Piercing line is built the other way around. The combination is at the bottom of the downtrend. The first candlestick is long red, the second is long green, while it opens below the closing price of the first and closes near the opening price of the first. 4. Harami and Harami cross. Harami consists of 2 candles, where the body of the first candle is always long and the body of the second is short. In this case, the colors of the candles do not play a big role. The second candle should always open below the previous close price in case of an uptrend completion and above the previous close price in case of a downtrend completion, which suggests a price gap. This combination signals the end of a trend and the beginning of a reversal in the opposite direction. The shorter the body of the second candlestick, the stronger the reversal signal. A special case of Harami is the Harami cross, which is formed when the second candle of the combination is a doji. In this case, the reversal signal is the strongest. 5. Stick sandwich. This combination consists of 3 candles. The appearance of the sandwich indicates the beginning of a new trend. If the downtrend changes to an uptrend, the 2 extreme candles will be bearish and the middle one will be bullish. When an uptrend changes to a downtrend, the opposite is true. In both cases, the body of the middle candlestick should be shorter than the bodies of the first and third. 6. Abandoned baby. This combination also consists of 3 candles. The middle candle is always a doji, which appears with a price gap in relation to the first and third candles. When a bullish trend is beginning to form, the first candlestick should be bearish, and the third one bullish, and vice versa when a bearish trend is beginning to form. 7. 3 black crows and 3 white soldiers. This combination consists of 3 candles. The bearish version of the combination is called the 3 black crows and is formed when, after an uptrend, 3 bearish candles in a row are generated on the chart, provided that the closing prices of these candles are decreasing and the opening prices are within the limits of the previous candle. 3 white soldiers is a bullish combination, formed when, after a downtrend, 3 bullish candlesticks are generated with increasing closing prices while their open prices are within the previous candlestick range. 8. Upside gap 2 crows. Quite rare but accurate combination indicating a downward trend reversal. Consists of 3 candles. At the end of the trend, a bullish candlestick is formed, after which, with a noticeable gap, 2 bearish ones are opened according to all the rules of the engulfing combination. This suggests that buyers in the market are trying to keep the price up, but are faced with resistance that they cannot handle. 9. Belt hold, a rare but reliable combination that signals a trend reversal. A bullish belt hold occurs when a bullish candlestick with a long body and a very short or no lower shadow is generated at the bottom of the chart over a period with a gap down. A bearish belt hold on the belt is formed exactly the opposite, at the top point for a certain period, with a gap up. The candlestick should be bearish with a short or missing upper shadow. 10. Rising 3 method. This combination signals the continuation of the trend. After a bullish candlestick with a gap, several short bearish candles are formed and closed with another bullish one. After that, the trend continues. Thank you for watching and see you next time.